Good day, everyone. Well, Happy New Year. We've got a market that seems to be rolling over, or wanting to. It's resisting, perhaps, because QE is still around the globe in force. But nevertheless, we've got a very lagging market in terms of leadership, which seems quite resistant to moving to new highs on solid ground on appreciable volume. So we've got a market that seems to be dragging its feet to kick off the new year. And as far as oil, the price of oil continues to plumb new lows. It's off another couple percent today. So the downtrend, this very aggressive downtrend in oils seems to be well intact. Commodities across the board, of course, get dragged down along with oil. So until this downtrend lets up, I think the market is quite vulnerable since the staggering drop we've seen in oil. I mean, it's lost more than 50% of its value in just a very short time. So that can be very unsettling for some countries like Russia. And we might see some other nasty revelations as a result of this plummeting price of oil. Anyway, the market seems to be triggering that it is weak here. We have a slew of distribution days, and the model, as far as the model is concerned, it is on the verge of going to a cash signal. Despite the QE effect, it is sometimes better to just sit on the sidelines and see what the market has to serve up going forward. But we know that the price of oil has been dropping precipitously, and the markets did have that mini correction of some 5% in mid-December, a month that typically should be quite quiet with QE in effect. In fact, the Decembers we've seen since 2009 have been either on the uptrend or relatively normal in terms of a lack of market action in terms of a very low volatile month. But this month it was appreciably, I think the VIX was at its highest level for a December since 2009. So that's kind of a clue right there, and maybe perhaps with lower oil lower oil and lower commodities, that the market could be pulling back again and perhaps retest those lows. So at any rate, the model is probably going to go to a cash, but we'll wait and see a little bit longer. But the model's on the verge of switching, and it might not stop at cash. It might go to a full-bore sell signal just to see if it can pick up some quick gains. Because as we know, when the market pulls in, it pulls in very quickly, very sharply. So at any rate, that's my prognosis so far for the beginning of the year. Gil?
Yeah, I mean, I came in this morning and saw the futures up 21 or something on the NASDAQ, and I thought, boy, this is a nice setup to short into this morning. So I started out the year throwing out short positions on things that were rallying that look like they're running into resistance, such as this morning I hit Yelp right off the opening, and it's up here at in this bear flag, and here's the lows of this bear flag here. And that's a resistance point. You got the 50-day coming down. So I'll hit this here and see if you get a breakdown to 50. The other one I like shorting here is this CENX. You have a Century Aluminum. You got a late-stage base breakout failure. So let's pull this up on a weekly chart. Well, let's see here. Here we go. And here you can see the big run-up and a V-shaped attempt to break out that fails. I was initially shorting this thing up here, got this nice move a few weeks ago on this breakdown through the 50-day, and now you're right around the 20-day on a looks like just a reaction bounce. So I'm looking to see if this thing rolls over. So, but everything kind of came in pretty nicely this morning. You can see on the S&P where we reversed and we're now down on the day. The Dow's trying to hang flat, NASDAQ's down 23, but I got the sense, I don't know if you saw this too, and it sounds like you did, Dr. K, that as we were running through the holiday week, which just has an upside bias, things just seem kind of sluggish, and it reminded me a little bit of what we saw back in late November, early December, when before the market rolled over. You didn't see very many pocket pivots. All of a sudden, all these buy points dried up, and the time to be buying the pocket pivots was several days ago, well, a couple of weeks ago, when the market turned off the lows here, and you went to, I think your MDM went to a buy signal right here, and we caught that early, and everybody else is coming in late here once you get into a de facto uptrend resumption. But the market feels sluggish here, and so I'm sort of, well, I'm short right now a couple of things, not really going bonkers. Another one that was a good short this morning was Tesla, which is broken down very hard, so you could have hit that right there this morning. They opened it up just a pinch, and I don't know why anybody wants to own Tesla. I think the stock is done, and the company's probably reached at least its short-term peak for now, and it's going to correct, and maybe it builds a big old base, comes down, you know, maybe below 100 or somewhere, I don't know, but I think it's going lower, and I definitely think it's going to test this low. Let me link these here. There we go. I definitely think you're going to test this low down here, which is one, yeah, we need a cursor here, which is going to be 177.22, and I think you're headed there. And you can see on the weekly chart, all you had was a rally back up into the 200-day moving average. And if you can even see a big head and shoulders here, but you have a higher right shoulder, so you have an ascending neckline you draw it through here. You can see that the rally carried up to the 40-week / 200-day moving average, and also the neckline of this head and shoulders formation, which served as pretty severe resistance for the stock as it came up towards the 40-week line. Didn't quite get there, so in my view that makes it a little bit weaker, but you can see the wedging rally. It's light volume holiday BS. There was some news about, Germany is going to be promoting electrical recharging sites for electrical vehicles and blah, blah, blah. So that's what kept pushing this a little higher. The Roadster, they announced that they're going to have a 400-mile range on it. Big deal. Who buys the Roadster? But a lot of their competitors are moving in to their space very rapidly, and I think some of those brand names have much more, say, consumer-friendly prices than the sort of the oddity that Tesla is as a rich man's toy. As I call it, the favorite toy of rich white liberals, because that's who you see driving them. Anyways, everybody sees my screen okay now, right? We kind of had a weird morning. I was working out of my home office this morning, and the power went out right around the opening, pretty much right on at the opening. I have battery power that'll last me a couple hours, but I wasn't going to risk running a webinar in the middle of it, so I skateboarded down the hill to my office here on the beach in Playa del Rey, where the power is still on, and so we're able to run this okay. But that's a little odd. And then, Dr. K, you had some trouble getting on the webinar this morning. So and then some of you say that you couldn't see the charts, so I just want to make sure that you guys can see the charts. Somebody want to...
Yeah, everything seems pretty stable now.
Yeah,
now that we've been
you see everything just fine there in South Africa. Okay, so everybody else says, yeah, and I think we had a little bit...
And the model has gone, so everyone, I just sent out, but the model has gone to cash.
Okay, so models in cash, possibly going to a sell signal, but you can see there's a very V-shaped move, and so I got a sense that it was a little bit sluggish, and so, I just thought you got to come after the short side on this in the morning, on this ridiculous 20-point rally in the futures on the NASDAQ. It just seemed kind of messed up, so to speak. Anyways, let's look at a few other things. I think you got to be looking at the short side. Twitter here is looking like it's ready to break to new lows, so you're getting this little sort of reverse cup and handle, mini cup and handle. But notice how it's still following roughly the 20-day moving average. It's not precise, but it looks like it's headed lower. So that looks like it's going lower. If we look at workday, for example, you can see that this gave out at the 200-day line. So it basically got above the 200-day line. So you see how this works? Stocks can do this. They can rally above a moving average. They look like they're doing pretty good. You actually get a pocket pivot here, but it's a V-shaped pocket pivot. So if you're shorting the stock, you kind of want to back away there and then wait and see what it does. As soon as it starts to break down below the 200-day here, I think you can come after it on the short side. Now we're breaking back to the lows, and this looks like it wants to go lower from here. And you got Splunk. Same thing today. You breaking down heading back to the lows in the 200-day moving average. But you can see that you stalled out here at the 50-day, and notice how you go a little bit past the 50-day and you close just above it here. But the thing to keep in mind here is that when you're looking at these rallies and figuring out where you might want to short a stock, and that goes past the moving average, then the thing you want to look at is perhaps a zone of overhead resistance. So all these lows in here, and you can probably like draw a zone of resistance somewhere between here, and the stock gets up into that pretty good. And then it rolls over, and then once it drops back below the 50-day, it could be shorted there, and the thing came straight down over the last 4 days. It has to basically end the year on a weak note, and today we're starting the year out on a very weak note. So in general, this thing looks like it wants to test this low, and that's where it's headed. But you know, any of these were up this morning, you could have hit any of them. So it wasn't like it was rocket science. And I saw a couple things up pretty good, pushing Yelp to 55.50 and 55.40, I guess, and I just started hitting it there. And the CENX, I opened it up. I'd already shorted some on Friday around near the highs, which is like 25, like around 25.40, 25.45, somewhere in there. Now you're a buck lower, but it looks like you want to come down here and roll over. And so I hit that and Yelp this morning. Tesla's another good one coming in pretty hard now. So, you know, it's a good way to start the year out making some money on the short side. We can see the Dow now going down 32 bucks, 28, 29, 30, 28, whatever. It's going lower. NASDAQ down 31, 32. So to me, it looks like we're heading into some sort of troublesome period here to start out the year. And so I'm not. I actually went to cash on Tuesday, and on Wednesday afternoon I saw what was going on in terms of the reversal. That was actually pretty surprising. Did that catch you by surprise, Dr. K, that New Year's Eve sell-off, like we're at the end of the day, just wham, they slammed everything?
Yeah, I mean, again, December should be a pretty quiet month with QE in place. At least it's been pretty quiet prior December since 2009, and so this was the most volatile December we've seen with QE in effect. Of course, there is no QE4 yet. There's no formal announcement of it, and so there is really no safety net in the U.S. market. But the overall tone of the global central banking system is that QE is being printed in full measure. So, you know, that I think created quite a bounce in the markets, but nevertheless, the U.S. does not have a safety net, and I think it's going to take some sort of correction beyond 10% for the Fed to step in and say, okay, we're going to start QE4.
Yeah, potentially another crisis-type situation, and that might be what drags the Fed in. But before that happens, we could see a pretty good downdraft, it looks like. And you're seeing some of the weakness in a lot of these names. So I'm just looking around. I'm going to go through some of my shorts.
And the major indices are right now, they're only off. I mean, the S&P is barely off 2%.
Right.
You know, NASDAQ 2%. So they've got ways that they can certainly correct a lot more.
Right. You see TripAdvisor running into resistance at the 50 here. Silica Holdings, I'm wondering if this thing's going lower, because I still think if this is going lower, this is all related, and maybe Silica's going lower, but it's already had a pretty severe breakdown. You like this chart. That's beautiful, especially if you're short that when it happens. And you undercut this low, and now you're kind of hovering down here. But the whole group, I think these could go a lot lower. You've got all these guys on TV talking about how they're cheap now, and you want to go after these frackers. But the time to be buying Silica was when you had this pocket pivot right here. I think we put an alert out on that, and that was actually started a nice run in the stock, and it just trended very nicely, pretty much above the 20-day the whole way, and definitely above the 50-day until it started to fail. And there, you could use the 50-day moving average here as a tight stop, or even the 10-day up here once you get started to go parabolic, but not looking so good right now. So anyways, gonna hunt through my short list here. Some of the biotechs, Gilead, somebody's putting a buy recommendation on that. I think you're at a point of resistance in here where it's a short, and it's probably going to roll over. But you see how it gapped down, got a little obvious, undercuts this low here, busts through the 200-day moving average. You had to be short this one either here on the gap down or before, which you wouldn't have been because there was a pocket pivot right here. It was looking good, and then they busted it. Now it looks like it wants to head lower. Some of these others, like Biogen, starting to look a little funky here, like it wants to fail on this breakout attempt. And if you look at this, you got this big sloppy cup with handle, and that could happen. You get a failure right here. We're down 43, so things are getting a lot worse as we're talking here. Let's see.
Yeah, actually, it's interesting how fast the market can change sometimes, because the model now is shifting to a sell stance. So this is very quick action.
Wow.
Yeah, as we speak. I mean, there's a lot of selling pressure coming in. It seems like it's not letting up, and it's only accelerating. And we're only, you know, we're on a Friday where many people are on vacation still, because yesterday was the first. Yesterday was holiday, so people aren't really coming back till Monday. But it could be that Monday the markets get a nice whack when the institutional money starts to leave the markets. But right now, yeah, it's not looking good.
No, very weak. somebody asking beta. Here's beta. Well, yeah, I think it's probably shortable. If we throw a 65-day exponential, which I think I'll put one up here. Let's see, basic studies, moving average. Where are you? Oh, there you go. We'll put up a 65 here. Whoops, a little bit fast there. And we'll color it black, exponential, and OK. Here we go. And you can see you ran into resistance right at the 65-day exponential, and you really couldn't get beyond that. Now you're at the 20-day, and that would be your trailing stop if you're short up here. But again, I think in this rally you could short it here. I prefer to have shorted it up here, but you could try and short this. But you know, the other aspect here is to look at your 620 chart. I'm going to have to set up. Give me 1 second here. Yeah, so here's a 620 I got set up here. So if you're looking at bid up, and you already had the sell signal this morning. Wait a minute, what am I doing? There you go. You haven't had a sell signal, no, you had a buy signal. How's that? And you're getting a little stretch on the upside. You can see the MACD stretch. You know what? I want to change this around a little bit. Let's make these thicker so we can at least see what the hell's going on here. Make everything thicker. Okay, here we go. There we go. That's better. I don't know. Yelp seems to be a little bit stubborn here. Just watching it. Saw it run all the way down to 54. So this may be on the basis of the MACD stretch here. Now you got a cross up here, but you don't have the prices. The price moving averages up here aren't crossing yet, but you are in a sort of a stretched position here, so you might think about coming after it here. I don't think I can short this turkey. Let me check something here. Well, it doesn't say. Yeah, they actually let me get some off here, so I'll give that a whirl and see if that works. But that's in that position right there, so. Yeah, and I'm not hitting a big position. Maybe I'm going to say what, 20, 15, 20%, kind of small for me. Anyways, so yeah, your question, bit of short here. Yeah, you can try and short it here. LCI probably as well, but it only trades 869,000 shares a day, so it's not something that I would look at shorting. It's a little bit too thin for me. Let's see, any other questions? I noticed some of these things, these leaders, PANW coming in hard and failing. See that? Yeah, you're failing on that gap up rate. That's not a good sign. This may become a short here. I'm also noticing data. Look at this. Failing on this breakout, so maybe this morphs back into this is a big pod here, so maybe this is the short sale point as you're breaking the 20-day moving average. That might be a spot to come after the stock here. And we look at work days also. These are all these stocks that I talked about several weeks ago, I think in November, early November, as they were coming up around the right side on the weeklies. And you saw that in Yelp, and that's failed. You saw that in Splunk, and that's failed. And maybe data is going to be the last one. Yelp has already gotten there, failing here. This is actually one of my best shorts in December, especially on this rally here that broke down. Let's see. Somebody's asking about some other stocks. TNet. Well, that's breaking down. I wouldn't be sitting on that. If I own this stock and I bought, say, a pocket pivot excuse me, a pocket pivot here or here, maybe this is where it is, yeah. And it doesn't hold the 10-day, I'd be going, so I wouldn't sit there with it. And you got to have a stop on that, and I certainly wouldn't be buying it. Skyworks, I don't know, there's nothing really there yet. It's not breaking down through the 20-day moving average, but it's up there. RH, not really doing anything there, pulling back through the 10-day and pushing down to the 20-day moving average here. So I think I want to make all these. I haven't run this screen, or haven't had this screen up for a while, mainly because we haven't done any webinars from the office down here for a while. But some of these I want to make them a little thicker. There we go. A little easier to see there. But you can see these are just breaking down, like selling up with the market. But you know, if you bought them lower and you have decent profits in them, why not take it and then wait for it to set up again along the moving average? That was a technique I used constantly throughout the year last year, and it worked like a charm. So notice the beta coming in just a little bit here. I was surprised I could borrow it. I haven't been able to borrow that thing. Let's see, RH, so we went through that. If the market turns around here, do you think the printers, DDD, and ONVO are viable ideas? Why would anybody think that? Why would these be viable ideas? What makes you think, this is a laggard stock that's so broken down, why do you think that's going to turn, and why would I think of that as a buy? If you think that we would look at this as something to buy, then you really have zero understanding of how we approach the market, because there's no way I'd be touching any of these pieces of garbage, and I certainly wouldn't want to come after this thing. It's a piece of garbage too. Cheap stock, you get fixated with it. You know, I was fixated with this thing early in the year, and it never went anywhere, and there were plenty of other names I should have been on top of back then, but I wasn't. And so, you know, just asking a question like that is just kind of dumb. You know, sorry to say it, but it's just kind of dumb, because why would you just buy something because it's way down there? Where are maybe you got a bottom fishy pocket pivot here, but you're under the 50 and the 200-day, so it's got a long ways to go before it starts rounding out a new base, which would be the only thing that might get me more interested in the stock going forward. Anyways, yes, I already pointed that out. PAMW is failing, so you can see the breakout, and that's probably going to be a short, and probably going to blow to pieces. So, anyways. But you know what? When the market turns, I don't need to have some idea of what I'm going to buy when the market turns. I can see what's turning with the market when the market turns, and that's where I will go. I don't sit there, you know, trying to guess what I'm going to buy or deciding ahead of time. If the market turns, then I think I'll buy 3D systems. I mean, that's just kind of stupid, because you just watch what the market's doing. It will tell you what to buy, and if you're alert to where things are set up. So, give you an example. When the market turned a couple weeks ago, you had a stock like Cyber coming right down to the 50-day moving average. Now that stock's basically still in an uptrend. It pulls down at the top of the prior base and the 50-day moving average. You got voodoo volume signatures, extreme volume dry up. That's what a voodoo day is, right? And so you buy it there. It's the market's turning, and then you get a nice move. It runs up, you know, I don't know, 20%, something like that from here, 15, 20. Sell into that move, and it comes back in. And then I was actually trying to buy it in the 10-day line here, but it didn't hold, so I just blow out real quickly. I don't sit with it. But that's the sort of thing that you're looking for when you see the market turn. You got to go through your buy watch list, and hopefully they're good stocks that are in decent positions. So you had this one pulling into the 50-day on a voodoo pullback. You had Palo Alto Networks on that day. I think it was here pulling back last week or a couple weeks ago. It was pulling into the 20-day, and it held, and then it turned off the 20-day. And I actually bought into the stock here, and it gapped up the next day, ran out of gas, so at the peak, and pulled down. But see, that's what I'm looking to buy, this sort of thing. I'm not sitting here saying, well, gee, if the market turns, I think I'll buy 3D Systems. Why? Because it's way down there, and it's automatically going to go higher. To me, that just reflects a very poor understanding of the market. So you got some studying to do. Hard to hear you at times, voice fading. I don't know, it could be the mic. And I'm moving away from the mic at times, so not a big deal. Let's see. Anyways, sorry guys, but I have to tell it like it is. So one thing I can guarantee you is I'll never BS you. I'll tell you exactly what I think, even if it may not be all that professional or kind. Right, Dr. K?
Exactly.
Let's see. Any other? Baba. piece of garbage. Short. It was a short. I mean, this thing's set up. Couldn't hold the 10-day or the 20-day here, which it should have. Okay. But this is when the market turned, I bought this one and got a few bucks out of it. And then when it couldn't hold the 20, I'm gone, looking to buy it back at the 50. It started to come off, did not hold, closed below the 50-day here, and then violates it on, well, you could say, is that a violation there? That would have been on, let's see, Friday, on Tuesday, Dr. K, right there? 3 days ago.
That would be.
Right here. And then, yeah, so you're violating the 50-day. And so now you're coming down to 65 days here, but it looks like you're headed to the top of this cup base or IPO U-turn. But you know, I have to say that looking at this going into year end, I would have thought that this stock would have gotten support, and so there's something wrong here. And you're seeing it go lower. 103.51 now is where it's at, and it's just breaking lower today, and maybe it just comes apart, and maybe that's pretty much it for BABA. So if you're the idiot buying the breakout here and sitting after a 20% gain in 1 week or whatever it was, you know, 8 weeks, because there's some dumb rule that somebody's giving you that really statistically does not play out in the market. Okay, I'm going to repeat this again. The 8-week rule is a pile of crap, and it does not play out statistically in the market. If you operate on the basis of that rule and hold stocks that have sharp gains like that, guess what? You're going to be giving them up most of the time. Sometimes maybe you run across one that works, but I can show you example after example after example in 2014 where if you had a 20% profit and you held it, you know, look at this one. Here's a big, you know, breakout from a cup with handle, 20, I don't know, what is it, up more than that in what, a week and a half? That's 46 to 58. What is that, Dr. K? 20-something, 25%? I don't know.
25%.
Yeah, and then what? So then you buy if you bought this here, okay, and you see this, now you're going to sit here like a moron for 8 weeks. Why? Because somebody told you to. I think that's just stupid. Because my experience in 2014 was you could sell into these moves and then hang back and then wait for a continuation pocket pivot or some other pocket pivot type move on the pullback or even a voodoo pullback to buy the stock back. And at least you're doing so in a lower risk position after having bagged a very nice profit. And I did this repeatedly. You know, I go back to a name like SunPower. Here is, some of you might remember me saying you could have bought it in here, and we were buying it in here, and then you got some nice movement on here. And so I'm buying this thing around 32, 33, and it runs up to 42. You know, what do I have there? I've got a 25% or more profit. Take it. And here you go. You come all the way back in, all the way to the 50-day. You could think about maybe buying it back here. If it fails, you sell immediately. You can think about buying it back here. But again, you know, these sorts of breakout moves, and you get a 20%, maybe you sit there for 8 weeks, you're just going to give it away. And it's really sad to see this sort of thing being promoted as some sort of rule to operate by. And it really kind of makes me ill. So Apple is breaking down. So I've talked about this one. It looked like it was going to hold a 20-day, and boom, and now you're getting hit. So, you know, that's not really giving you any nice sign of what's going on in the market. They're hitting Apple, and Apple's supposedly, you know, a shoe-in for $200 a share, and so everybody owns it. And I think maybe that's the problem with BABA as well, along with Apple. They both suffer from over-ownership fatigue. You know, everybody believes that they're sure things, and when that happens, you know, that's generally not the case, because we can remember Apple being a sure thing back when it was at $700 a couple of years ago in 2011, 2012, and that's when it topped and had a big breakdown. So up here, everybody thinks it's a sure thing, and it's breaking down, and I don't think this is very positive for the market. Yeah, and it got no year-end support, and I thought that was a little bit surprising to see, given that you know, these are big names that you would expect to see getting supported into year-end, and so it's very somewhat shocking. And BABA too. My theory was that BABA would be bought, but see, I don't buy stocks or I don't jump on a stock with some theory. If I have a theory, that the stock has to prove my theory. If it disproves my theory, I'm gone. And my theory was that it would hold the 50 and pull back and then try to rally into year-end, and it did not. And so that is out the window. If I have a position in that, the position is out the window. The whole thing is out the window. So let's go. Facebook. It's failing on a breakout attempt. But of course, if you're going to get on this thing, here's a pocket pivot I think was here, and so you want to be buying it there, not on the breakout, or thinking you're going to buy it on the breakout, because IBD is telling you it's a breakout, and you're going to use this high as their buy point, which to me is incredibly stupid, but that's just me, and you're failing. So, thank you. Let's see. Anybody got any good, I'm going to look at some of the other biotechs. I'm watching these biotechs and I'm wondering if they're going to start failing, because you got a big break here to the 50 on Celgene, and now you're finding resistance at the 20-day. That, on a failure, when a stock starts to fail off the peak, and you start to get a breakdown through the 20-day like this after it's been acting pretty well, and it's high volume down to the 50-day, and then it bounces feebly up to the 20-day moving average, that's vulnerable. And if Gilead rolls over, maybe that's the case. You can see Biogen to me also looks weak here. What are some other big, Alexion is another one that's starting to look a little weak, because again, this tried to break out here. That's a failure. It goes through the 20-day, through the 50-day, rallies back up to the 20-day. And now you're getting this rally here where you got the 20-day crossing below the 50, which I think is a sign of weakness. And this thing looks like it wants to head for the 200-day moving average. So, you know, I can just look around at everything, and the way things look just doesn't look very good. So QRVO, so RFMD and Triquint both, yeah, now you can't tell what, Cuervo, is that the name of the, boy, what, that's an interesting, that sounds like a nice, like Jose Cuervo, QORVO, that's the name of the new company. It's Triquint and RF Micro Devices. Yeah, can't tell much from there, can you? But I'm not going to mess around with those. Five below is not. That looks like a short. It does, because you got this failure here. But it's a little. It's kind of thin, but maybe that's a short too. So piece of garbage. Illumina. It's probably another one that's going to fail. You know, you're up here, the big ugly cup with handle. You break out. I bet you this thing fails. Market rolls over. This thing fails. Check out Lock. I talked about Lock last Friday last Saturday after the during the stock hunting webinar right here, and the stock had a nice move. But of course, if you bought it there, let's say you bought it here on this day, and let's say you got in at 17.50, and you run up to 19, you got a nice profit there in 3 days. You might as well take it. Instead of thinking that you're buying a breakout that's going to be this beautiful thing. Now look at this thing getting plastered. Not a good sign. Not a good sign. Kite was another one that we looked at actually last week, and here's a pocket pivot, or no, what did I say here? This was a pocket pivot here, and then this is last Friday, and I thought it could be bought right there at the line, and it's holding above. But you know, just if you got a profit in this, you might think about taking some of this up here, just based on what the general market action is doing. The MDM just went to a sell signal. So, okay, Swerve, Sierra Wireless. Whoops, put an I in there. It's holding the 10-day, but it's up there. So, you know, if you bought this one on the pocket pivot, you might think about taking some profits. Nothing wrong with that, really. Amazon. That looks like a short here outside reversal day. See, this is one you could have hit this morning. Reverses at the 65-day and the 50-day. Now it looks like it's heading lower, maybe heading for this low. You got earnings coming out with all of these later on in the month, and then early February, so we're moving into earnings season. Some of these things maybe you don't want to be short into earnings, but if you can get some movement out of them before then, go for it. Let's see, Dow's only down 5, so they whacked this thing pretty good, Dr. K. Now they're trying to turn it. What else is new? But it's a QE market. Expect the unexpected. Let's see. What else we got going here? Netflix still remains a short sale target, and it's rallying. But you notice how if you were trying to short this along the 20-day, it's not really giving you any love. And it's probably, after undercutting this low, it's probably ready for a rally up to the 50-day, and I'd be watching this. But this is a rally, you know, that could find resistance anywhere between here and the 50-day, and I think you would be watching this on the 620, but there's no sell signal yet. So, anyways, well, bid has started to look like it was coming down. What you guys all came in and shorted it, knocked it down, and now it's being pushed the other way, huh? Any other questions? It's 8:36. I don't really have a lot to say here, but there are some key stocks that I think can be looked at on the short side. I've already pointed them out. Here's another one to keep an eye on, and this may be shortable here, is ARM Holdings. You're actually like a very sloppy base on the weekly. You try to break out from a cup with handle. You've been failing, and notice how you're just doing this chop, 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 chop. If Apple gets hit, this maybe gets hit too. So you might keep an eye on this one. On the 620 chart, you had a sell signal earlier around 7:30, and now that's my time. That would be 10:30 East Coast time. Now you're rallying back up into the 50-day, or I'm sorry, the 20 period. It's a blue line, so for me on the daily chart that's a 50-day line or a 10-week line, but here it's a 20-period line. So you're rallying back up to that. Maybe that becomes a short there. What else? What was your final percent return? So I don't know, it's like 115%, something like that. But the year's over, so I don't really care about it anymore. I'm more interested in next year. I paid my taxes and we move along, but I plan to do the same thing this year. I think it's doable because it doesn't really matter how the market trends. I think the methods that I've worked out, using 620s, using the short side, using voodoo dry apps on pullbacks and trying to anticipate pocket pivots and things like that is really what led to me being able to do so well in 2014, and that's going to be the continuation of my strategy in 2015 because I don't really see anything changing. I don't see, like Dr. K was saying earlier, they might come in with QE4, but right now all the QE is still sloshing around. They're just not throwing any new money into it with the bond purchases, but all that money is still out there sloshing around. Interest rates are still near 0%. Maybe the market's telling us that we're going to see interest rates start to rise. Gold is a barometer there, perhaps, to some extent, and it's below the 50-day, not doing so well. We were looking, what's oil up to right now, Dr. K? Not breaking for any lows.
Oil was well, it was off about 1.5% or something. Now it's trying to come back a little bit.
Let's see. Cyber is breaking the 50-day. Yeah, I don't like the way Cyber's acting. I don't like the way anything's acting. You can just see across the board. Go through your buy watch list, you're going to see everything's breaking down. You go through any list of stocks down on volume, and you're seeing a lot of stuff breaking down. You're seeing Apple break down, Twitter's breaking down, Facebook is breaking down, Amazon is breaking down. The biotechs are looking wobbly here. Palo Alto Networks is getting hammered too. The whole group on the cybersecurity side there is getting hammered. And that's a group that I actually thought might be a place to focus on in 2015, and maybe I'm wrong there. But we are seeing it, I think, in these stocks, and I think it's telling you to be cautionary here. So I like your sell signal, Dr. K. But anyway, somebody else asked, let me go through some more questions. Cyber is breaking down. Would you consider the past 6 days as voodoo volume? No. I'm not. That should hold tight. If you're getting voodoo volume alone, that doesn't mean anything. It should be holding tight and going sideways, and that's when the volume dries up. So, more proof that a little knowledge is a dangerous thing. So you understand something called voodoo volume, and now you think it's some sort of indicator that you use to buy stocks when you fail to understand that it is contextual. So unless a stock is pulling in and holding nicely and the market's starting to turn, you see the retest of the 50-day here on voodoo volume and it holds. That's constructive. This coming down, I don't care what the volume looks like. If it can't hold anything here on these moving averages, the 10-day, the 20-day, the 50-day, that's not really what I'm looking for on voodoo volume. I got a question over the weekend, somebody asking me about the reliability of a voodoo volume signature. And again, that's the type of question that tells me this person does not understand how the market works, and they've been essentially brainwashed into believing that everything is a matter of probability. So in other words, how reliable is a pocket pivot? How many do pocket pivots work better in certain types of? To me, that's all silly stuff to ask. It's all contextual. A pocket pivot in a leading stock that has been holding up very tight in its base and is moving tight along the 10-day or the 50-day moving average, and you see a pocket pivot in a leading stock like that, that's a buy signal. To say, do all pocket pivots, do they have a 90% chance of winning? That's like asking the same question about a particular base. Like, does a cup with handle always produce a breakout? You'd be surprised back in the early 2000s when we were when I was at O'Neill and we were doing the chart or pattern recognition project. We hired a bunch of PhDs, mathematicians, to figure out how to screen for bases. So what we found out is the pattern recognition would pull up all sorts of patterns, cups with handles, for example, and the majority of them failed. So the cup with handle pattern in and of itself probably has a higher failure rate than a success rate. But if you move that into more of a contextual basis, so a cup with handle in a stock that's potentially has new products and some sort of dynamism going on with their business as a growth story, then the cup with handle is effective as a pattern to buy. But the idea that all of the market can be reduced to just a set of statistics without understanding context is flawed. And I think the problem with a lot of places, and this even includes IBD, is that they brainwash people into believing that if you can slap a label onto something, then that's sufficient information to make an investment decision. And I don't think the market works that way. So, anyways. Somebody's asking.
Well, it's kind of like the lazy man's way out. Lazy way
it's
for
easy
people
man's way out,
to,
yeah.
you know,
And most people are
hope
lazy.
for, something that's, yeah. And so, that's actually great self-examination when at the end of the year or at the end of every quarter, when someone's going through their trading journal and seeing the mistakes they made, to ask themselves, how fortuitous and focused and disciplined have they been to stick to their rules?
Yeah. So, and I think understanding how things work in a contextual basis is critical. It's absolutely critical. But it just amazes me how many people, and even after you try and teach them for a year or two or three, they're still trying to put labels on everything as an easy way out of not really thinking. Like somebody wants to ask, is something a pod? Well, if you can say it's a pod, just because it's a pod, so for example this, doesn't make it a pod. It has to fail. And once it starts to fail, then it has the context of evolving into a pod, and that's something you start to look at in terms of potential failure as a short sale pattern. But just because if I can say, oh, this is a pod and stamp a label on that, that doesn't mean I just start shorting it willy-nilly. You need some contextual action on the daily chart. It needs to start showing a breakdown, which in this case data is showing a little bit of a breakdown, but so far not really. So market's kind of all over the place. I wouldn't be surprised if it continues to be all over the place for the rest of the day. Anyway, somebody's asking any update on the timing of the new book. There's no update. We're in the final production phase, and it's if you go to Amazon.com, you can pre-order it for delivery in April, late April. So, it's not like this changes, every day. Like, oh no, it's coming out in March. Oh no, it's coming out in June. Oh no, but we're back to March again. Oh no, it's coming out in April. What do you think? It changes every other day? We have a schedule for the final production. The book will be ready in April, just like it says on the website on Amazon.com. Let's see. When you see a pocket pivot in the afternoon, do you buy it then or do you wait until the next day? I wait until the moon is in the 7th house and Jupiter has aligned with Mars, and then I'll buy it. Sometimes I buy them before they happen. I just buy them. Why would you wait till the next day? The closer if you see a pocket pivot developing in real time, and the closer you can buy to the moving average, whether that's the 10-day or the 50-day, you buy it there. You don't say, well, gee, do I buy it today or do I buy it tomorrow? Like that's some sort of a rule. So, if you see it there, you go for it. Sometimes I anticipate them by buying the volume voodoo dry-ups on the pullbacks, So basically, you could anticipate this one here, you're drawing up on the pullback in here, and I actually bought this one initially here, and then you got the big pocket pivot, and I'll be buying them in there. But, as soon as you see a pocket pivot developing, you're better off being quick and buying it as close to the moving average as you can. Now, if it gets extended and you didn't buy it, then you could wait for a pullback, but just having some rule like, do you buy it on the same day or do you buy it the next day? It's kind of dumb. Anyways, VA. VA, I think, should be sold. We had the pocket pivot here. That was right around, 35, 36, and you're at 44, 45. That's a 20% gain. Why not take it, in my view, and let it see if it pulls back. But I'm guessing that's going to break out and yank back if the market gets weak, So why sit there and let a really nice profit just get wasted away? Let's see, any other questions? I did just comment on VA, yes. Down. Look at that. We were down 5, now we're down 39. I don't know. This doesn't look like it's going to end well. Does it, Dr.?
Nope.
And it's only the first day of the year, so, I don't know. Any other
And the
awesome
volumes are pretty
questions?
larger at this time of day than any of the prior days, so there's something going on.
There's something not quite right, yeah. There's something goofy. I'm watching Netflix rally. That's one I want to come after, but I'm just watching it rally for now. We'll see what happens here. Any more questions, you guys? We're at it's 8:47, so we've been going for about 45 minutes or so. And nice to know the power down here has stayed on. So, but I'm just up the hill from here. I'm wondering why our power in the neighborhood up there is out. Maybe some car ran into a power line or something. Anyways, we actually have one of our biggest crowds ever live, so that's pretty good. Anyways, no other questions here. So I think we can sum up. Yeah, I can see a number of stocks that I think are short sale targets. This morning you could have hit several of them. Keep your stops tight though in case the market turns if you're going to test the short side. I'm sort of doing this in small size right now. I think the biggest short position I have out right now is Yelp, and it's only about a 25% position right now, which is, for me, is kind of small. So let's see. What are you planning for tomorrow's? I don't know, the usual stuff, I guess. Let's see. Anyways, this is VoSI, you guys. This is not the Gilmore Report, so I'm not here to answer Gilmore Report questions. Let's see. Do Fibonacci frequencies could be correlated to 50 NT while shorting? So I don't use Fibonacci frequencies, not necessary. I think, like most things, it's just too much to think about, so why bother? Keep it simple. So you want to start getting into Fibonacci and everything, and I think you become too reliant on stuff that's mostly baloney, I think, and I think you can figure things out simply by learning to understand price-volume action and what you're seeing in front of your eyes instead of trying to trace out Fibonacci levels. So, why complicate things? If you find you like using Fibonacci levels in your own trading and contextually it works and you can do it, but I don't, so I don't really see any reason. How many stocks do you normally have in play? It varies. I might have a number or I might have only one. So, again, that's if you're asking me a question like that, or even Dr. K, that's not. We don't have a rule like we will play 5 stocks. We will play 2 stocks. It's whatever's there set up and how deep I want to go in, whether I feel like I want to be a little spread out or if I want to be a little more concentrated because I have more conviction in what I'm seeing in a name or two. But there's no rule about how many stocks I'll have or some method. I don't go for the whole O'Neill thing with it. Well, if you have 100,000, you can have 3 stocks, and if you have 5,000, you can have 1 stock. And I think you can have as many stocks or as few stocks as you feel comfortable with. And the idea of having to decide ahead of time seems kind of dumb to me, but that's just me. Anyways. Not looking for rules, just ask me how you do it. Well, that's how I do it. So, but again, understand that to ask a question, how many stocks do you play? Well, why is that relevant? If I told you 10, does that mean you're going to run out and do 10? If I told you 5, would you run out and do only 5? Or if I told you I only do 1 and I buy a 200% position, which happens sometimes, would you turn around and do that? Like I said, it depends on what I'm seeing and how spread out I want to be and how concentrated I want to be based on the conviction I have on a particular name. If I see a real juicy setup, I may just go for that thing all the way. So I don't really trade like most people do, I don't think. I think a lot of people have trouble doing what I do and doing it the way I do it. But I do have the luxury of being able to sit and do this all day. Grub-a-dub-dub here, having a pocket pivot right there. I guess you would call that. That's an up day, but I think it's red because it opened higher than it closed. And you got a pocket pivot, but that's the pattern. I'm not going to buy that. That doesn't look right to me. I don't see anything you want to buy here. I'm looking at short stocks, and I gave you some ideas. You could try to bid it. It's not really working. Notice how it's pinching us here. And I put out a little bit. I may have to cover it. I'm down a whole $900 on the position. Oh, that's my sushi. GoPro, I'm not going to touch that one either. There's a weekly chart. You know, it's hanging along the 20-day. I couldn't tell you. You got any opinion on GoPro, Dr. K? Are you going to buy it? Is it a great story? It looks broken to me.
Yeah, I mean, the texts certainly look unwell. So, in fact,
Yeah.
you know, there's really not anything out there that I'm seeing worth going long right now.
Yeah, and GoPro, would you buy GoPro here?
Yeah, I mean, not a chance.
No, it's not really setting up right. And I think there's a lot of news, and they got everybody all scrambling to cover short. So, anyways.
It's just noise right now.
Yeah, it just seems like a lot of noise. That's all we're looking at here today. So, anyways, DENN, what is that, Denny's? Denny's Corp. I don't know. You had a pocket pivot here, but, you know, are you going to buy that here? It's kind of extended up there. So I'm not, nothing there. Any last questions? So I think we're going to wrap it up here. But, you know, hopefully you got some sense of what I'm looking at here, mostly on the short side. I don't see anything I'm going to buy long. I think this market's in trouble, and I'm going to lean that way until it shows me something else. I'm not even seeing stocks on my buy watch list trying to make comebacks here. I'm mostly just seeing stuff breaking down, and I'm not sure what that means, but it doesn't sound good or doesn't look good to me. So, Dr. K, if someone following the MDM, is it better to have a separate portfolio for it, or can you mix it with stock?
A lot of people do both. A lot of people just have their separate portfolio for the market timing. Some people allocate a certain percentage of their main portfolio to the MDM, and they alter that percentage depending. Sometimes if we get into a very stock-favorable environment, my recommendation would be to weigh more of your portfolio towards stocks and less toward market timing. And then as we get into an environment where there are very few signs of stocks in either direction, then you could allocate more to the MDM. So you remain flexible that way.
Sounds good. CRM, someone's asking about. This looks failure prone to me. If you see that you have a cup with handle breakout and you've rallied back up to the breakout point, you see that? So you're coming down and that's shortable. I mean, you would have rather have hit it earlier today instead of reacting to it down here, but it looks like it wants to go for this low. So I'd watch, maybe you get a bounce, intraday bounce. You know, if we look at this here, maybe you get a bounce up in here somewhere and it rolls over, you get another 620 signal. That's a possibility. But I think this looks like garbage, and it's probably going down. Dr. K, the powerful sounding. Yeah, Dr. K, you sound very like you've been getting a lot of rest and relaxation down there in South Africa. You sound rejuvenated, I might say, which is a good way to be.
Oh yeah, well, it's all good.
Yeah, so it's a rough life, but someone's got to live it. Anyways, that's all I got, you guys. I'm going to sign off now. If you have any other questions, you can always email us, and we'll do our best to answer. So, you know, we're off and running in the new year. Market looks weak, and we'll see where we go. You know, this could be a great month for shorting, and we'll just have to see what happens. In the meantime, that is all we have, and we'll catch you guys next week. So have a good weekend. We'll talk to you later.
So long, everyone.